What are typical repayment terms for hard money loans? You ever wonder what the fine print actually says in a hard money loan? I'll break it down so you don't get caught off guard. Before you sign anything, you need to understand how and when hard money lenders expect to be paid back. In this video, I'm going to explain the most common repayment terms and what to look out for before using a hard money loan. By the end of this video, you're going to walk away knowing exactly what repayment terms to expect, how to plan for them, and how to avoid surprises during your flip. Most hard money loans are short-term loans, meaning they are either bridge loans to get you from where you are to where you want to go financially, in a short term, or they're for an entire project like a flip. These are a group of people that have gotten together that decided we want to invest in people that flip houses. We want to use the house as collateral, but to do this, we're going to get paid a much higher interest rate than a local bank would because frankly, a bank will not fund a flip in most cases. In the repayment, most of the time, hard money lenders want an interest-only payment until you sell the property, at which time you will then pay off the principal plus any remaining interest. If there are points on the loan, which is 1% of the loan, that's 1 point, you'll pay that upfront at the closing. So that would come out of your initial proceeds. In other words, if your loan, for argument's sake, was 5 points and 12% interest. Well, you would pay the 5 points. If your loan was a $200,000 loan, you pay a $10,000 point fee at closing. That would come out of your first draw for the property. So what happens if I don't sell the property at the end? Well, at the end of the term, the hard money lender certainly has the option to foreclose on the property. They are not in the business of wanting to own property. A lot of times these are investors that have already flipped many houses in the past and they've elevated themselves to become hard money lenders. They don't want to go back in that game. They have the skill and they can finish a flip and do it if they have to, but they don't want to do it. So you have some options. One, you can negotiate with them and renegotiate. You may have to pay fees and penalties to extend that term, or you might try and sell it as is to get out of the property. You may not make as much profit as you want to, or you might want to do a cash out refinance as soon as you finish the project, pay off your hard money lender, and then either turn it into a rental, or you'll have more of a long-term loan on the property. You can choose to sell it now or at a later date without the pressure of having a hard money loan over your back. Let's talk about an early payoff penalty. There are some hard money lenders that design their loans so they have a minimum amount of time they'll loan the money to you. Otherwise, it's not worth it for them. So many times I've seen them have a 6-month minimum, which is usually pretty accurate for a flip. However, if you finish the flip in 4 months, the interest that you used, you will not just pay 4 months. If the minimum is 6 months, even if you flipped and sold that house and paid off the principal, you'd have to pay an additional 2 months or a total of 6 months in interest on that loan. That's just the terms. That's just the way some hard money lenders want to get paid. Now, they're not all that way, so it's important that you shop around as you're looking for hard money lenders to find the ones that have the best terms that fit best with you and your market. Don't get so caught up on that point though, because most of the times 6 months or more is typical for a flip, especially if you're new. You can always look in your initial paperwork and ask the question, is there a prepayment penalty? If they say yes, that's when you can decide if you want to use that lender or not. So what do lenders expect from you? You know what they expect? They expect professionalism, they expect organization, they expect execution, and more importantly, they expect communication. So as you start the process, remember how a relationship starts is many times how it's going to be. So make sure that you're professional out of the gates. If they have an application process, fill it out. If they ask a PFS or a personal financial statement, have it ready. Get that information right to them. When they ask for information on the house, have it ready. Make sure that you've done your homework in advance and have pictures, you have a scope of work, and everything they require. If you just communicate with them through the entire process and they feel like you're a good risk, then you will have a hard money lender to work with for life. Now, I'm always going to recommend that you move towards private money. Private money is the absolute best way to fund your real estate deals forever, with usually no points and none of the extra fees that come along with a hard money lender. You can learn all about those inside of our channel for private money lenders, so just take a look at the videos and find those. But that is how Amber and I, my wife and I, we fund over 100 deals a year, all with private money lenders. We've raised millions of dollars. So make sure that you check out our channel to learn more about that. You know, before you worry about repayment, Well, you got to worry about buying the right kind of deal. And I put together a video for you that'll explain to you how to define your buy box. If you don't know what a buy box is, I'm going to explain it in this video so you can know exactly what is the best property to buy to make the most amount of money in the least amount of time and block out all the noise from everything else you see around you so you can focus on just the good deals. Click the link in the description below and get that gift from me for free. It's my gift to you.